Hey, welcome back everybody. This is David. I'm the founder of SUPERIOR4X. We are a one-on-one private mentorship that helps new individuals master the Forex markets by becoming profitable, independent traders. Part 2 will be covering Forex brokers and everything you absolutely need to know about brokers because at the end of the day, choosing the correct Forex broker is one of the most crucial steps in a trader's career because at the end of the day, you are trusting the broker with your hard-worked money and of course executing your trades in a fair and timely manner. This video will also be covering how to acquire a trading platform either for PC, Windows, or Mac OS. It'll break down all the properties. Also, I'll be breaking down how to acquire a demo account so you can begin practice trading with fake money, of course. That is one of the beautiful things about Forex is before you go live, you could find a broker that offers you a demo account and therefore you could practice everything you learn maybe through me, maybe through someone else, maybe online, and you could find all these, like for example, technical patterns that you might seen, like head and shoulders formation or inverted head and shoulders, double top, double bottom, and you could go to the markets and you could actually execute trades and therefore see that these setups and these technical patterns actually work out, but you don't have to risk any of your money. This is all for the purpose of practice and getting better at your technical analysis. So now let's get into everything you need to know about choosing the right Forex broker. So broker types. There's essentially two types of brokers when you're going to be choosing your broker type. There's an ECN broker and a DD broker, which stands for dealing desk. There's some other abbreviations, but dealing desk broker is basically a market maker broker. Before I get into some of the explanations behind these two types of brokers, I'm going to point out that majority of retail traders like you and me, are going to be using ECN type of brokers, which is abbreviated for Electronic Communications Network. So some of the differences between these two types of brokers. So an ECN broker is not a market maker. When you open up a brokerage account with an ECN broker, a true ECN broker, now you have to make sure it's a true ECN broker. You can't always directly find out. They just make that statement it's a true ECN broker, but there is some things you could look out for. If some suspicious things start to happening that I'll point out later, then you could find out that they are maybe not a true ECN broker. What a true ECN broker does is he basically executes your trading position. If you were to buy Euro USD, your order would travel through something called a liquidity bridge into the interbank market, where your order will then be placed with other brokers, other hedge funds, other banks, other traders. That's with ECN broker and the execution of order type. So your orders just directly travels into the interbank, nobody else touches it, and now it's now your position and yourself against everybody else out there. ECN broker also does not have a fixed spread, meaning that during high volatility news, the spread will most likely rise. In part 1 Forex for Beginners series, I covered a little bit what spread exactly is, and with ECN brokers, spread is not guaranteed, and spread will change when high volatility news hits. One of the perks of having an ECN broker is they have lower spreads. With lower spreads, your trade will go into profits a little bit faster if we compare it to a dealing desk broker. So this is a rough breakdown of what exactly an ECN broker is, what exactly they offer. So a dealing desk broker now is essentially a market maker broker. And one of the key differences between an ECN broker and a dealing desk broker is your your trade is not executed into the interbank market. Instead, what the dealing desk broker does is he takes the opposing side of your trade. So if you were to buy, he would be selling at the same time. That's just how the dealing desk market maker business model works. Some traders will not like this because essentially the market maker is taking the opposing side of your trade, and your take profit might not always get hit. You might have wider spreads. So essentially it's more of a manipulative broker where he will cause certain scenarios in the market, or when he takes the position against you, such as spread widening, stop loss hits, trade not executing just by a couple of pips. Essentially that's what the dealing desk broker does. He's essentially making money off your loss, unlike the ECN broker where he's making money just off the spread. It's just a few dollars. But the dealing desk broker has a bigger profitable business model because he will essentially make all the money when you take a loss. So being a dealing desk broker, also known as market maker, is definitely a bigger and profitable business model if you compare it to an ECN broker. However, if you are a fundamental trader, a dealing desk broker has guaranteed spreads. A dealing desk broker offers guaranteed spreads, meaning your spreads will stay the same even though when fundamentals come around, your spreads will not change. That's the guarantee that a dealing desk broker is. And also, they have no slippage. And slippage is something where you, if you have a pending order, for example, like a buy stop at like say 110, but due to slippage, due to high volatility news, your order gets executed like 10 plus pips higher than where you wanted it to be executed at. That's what happens with ECN brokers. There is slippage all the time with ECN brokers. You can't really do nothing about it. There is a disclaimer when you sign up through any of the brokers, dealing desk or ECN, that there will be slippage. Slippage majority of the time happens only with ECN brokers. However, with a dealing desk broker, there is no slippage. So I guess you could say this is one of the perks of choosing a dealing desk broker if you are someone who trades high volatility news and you care a lot about your spreads. And slippage, this is something that you will go through with. However, the other side of it, where there's a lot of manipulation going on with dealing desk broker, is something that new novice traders want to avoid and probably just stick through with the ECN, electronic communication network broker. You don't have to worry too much about spreads widening or slippage, because when news comes around, and if you are a new trader, you want to be on the sidelines, probably just watching. People who trade fundamentals are more experienced traders who have been around in the markets, and they have an edge and they know what they do. Even if there is slippage around, they know how to stay calm and not worry about it because they have some edge over the markets. But for a new novice trader, we're just going to be sticking with an ECN broker. We're going to avoid the dealing desk broker due to the factors of heavy manipulation that goes on, such as stop loss being hit, orders not being triggered, spreads widening out of nowhere. And a dealing desk broker has every right to do that because that's his business model, and when you open an account with them, you sign off on that. There's like a big long list of agreements, and people just press agree, but he literally states all of that in that disclosure. So now let's move on and talk about swaps, slippage, and commissions that brokers charge. So let's now talk about commissions, swaps, and slippage. These are probably one of the most important things that you have to know when opening a Forex broker account. Once again, we're going to only be focusing on ECN brokers. We're not going to be talking about dealing desk brokers no longer, since we have concluded that for new retail traders, ECN broker is the broker that you want to go with. So when you have an ECN broker, a commission is usually charged. It's basically off the spread. The difference in spread is the commission that you will get. Basically, there's a bid price and an ask price, and there's a difference between those, a bid and ask price, and that's the commission that the broker charges you. Also, when your lot size goes up, so will the commission, but the commission is still going off between the bid and the ask price. So with one lot, if you were executing one lot, which is $10 per pip, the commission will be about $7. Every broker varies, maybe a couple of dollars higher, maybe a couple of dollars lower, but the standard with majority of true ECN brokers is with every one lot, you'll be charged a $7 commission. Now, what is swaps? Swaps is basically an additional charge that the broker will charge you when you hold on to your position. So if you are more of a long-term trader, you will be charged a swap fee on top of your commission fee. The swap fee will be a lot smaller than the initial commission fee, but essentially a swap fee is if you hold your position like from Asian session all the way through New York session, the broker will swap on an extra fee for you to pay, and it's technically a fee from session to session, from London to New York to Asian. Every broker varies a little bit different from when they swap on that additional fee, but it's usually in between sessions, between about 24-hour period every day. Another very important factor that you want to take into consideration is slippage. It's basically price being executed higher or lower than your desired price where you wanted to execute at. Now, slippage can work for you, but it could also work against you. And what I mean by that is, for example, if you had a buy stop set and you were trading some news, and then you had a take profit set about 15 pips, the market can move so fast that it can not even, so if your take profit was about $100, slippage can go past your take profit and close your position another 5+ pips more. So instead of $100, you will make $130, $150, whatever it may be. So you have taken away more profits than you initially desired. But that can also work against stop loss. If you were to set a stop loss at about $90, the market can move so fast during high volatile news that instead of losing $90, you'll lose $120. So it's a double-edged sword. It could work for you and it could work against you. That's the reason why I say for new novice traders, stay away from high volatile news, such as non-farm payrolls, GDP, CPI. There's a ton of high impact news that comes out throughout the month. So your job as a trader is, before beginning your trading day, go to a website such as Forex Factory is one, and look for the red folders that indicate high impact news to be ready. But you should have no worries since you won't be trading these high impact news. So slippage is something that you shouldn't really worry about. Also, if you set pending orders such as buy stops and sell stops, your price is not guaranteed as well. The true ECN brokers will tell you that slippage is normal, and if the broker cannot execute at your desired price, the broker has the right to execute your trade at the next best price. So that's something you want to be aware of as well. Some other very important factors that you want to take into consideration are spreads. Spreads do widen upon release of high volatile news, so it could take longer for you to be profitable once the market starts moving. Say the spread on Euro USD is 1 pip. During high volatile news, the spread could rise all the way up to 5 pips. And the broker, he doesn't have to warn you or tell you the spreads are widening. It's something that happens something when you sign off on that disclaimer or the disclosure, the broker states all that. So it's something you want to be aware of when you begin trading, especially high volatile news. But once again, you don't have to worry about them since you're most likely new and you will not be trading fundamental news. That's my personal recommendation. At the end of the day, the choice is yours. Another factor that you want to take into consideration is leverage. So, for example, if you open an account with 1 to 200 leverage, the broker usually does send out a notification to you if there is some high fundamental news coming out a week or two prior. The broker will usually send out an email and say that the leverage will be decreased upon news release, and usually this happens with higher impact news. This usually doesn't happen with non-farm payrolls or CPI data. This usually happens during elections, or we have seen it with Brexit, where leverages were brought down. Like if you had a 1 to 200, they could have been brought down to like 1 to 50. Now that's a big deal because you could get margin calls faster. But if you do have trades running already in the market, upon release of news, you could get margined out faster due to the decrease in leverage. Now that's something very important you want to take into consideration and have proper risk set. And also, like I said, try to avoid news at all. Try to have all positions closed when trading fundamentals, or stay up to date before your trading day, before you go on the market. Make sure you're not trading during the time of news, and if you are, to have proper stop loss set and always have proper risk set, because having proper risk is one of the keys of being a successful trader down the road. If your risk is not set, your account will get blown away faster. You might get discouraged if you are new, and you might walk away from one of the most lucrative markets in the world. So now we're going to wrap up this section, and we're going to move on and talk about regulations and regulated Forex brokers here in the US and offshore brokers. Now in this section we're going to be talking about regulation, which essentially means who is your Forex broker regulated by? Is he just by himself working out of his garage or his mom's basement? Or is he an actual legitimate business who's actually controlled by a higher power, who oversees everything they do, how they operate their business model? This is very important because at the end of the day, you are trusting this broker with your hard-worked money, and you are trusting them to be honest when executing your trades, so everything can be fair and everything that they state or market to the reason why you got attracted to them or signed up to them, that they are living up to their promise. So let's begin by starting off with USA. If you are currently residing in the US, you might heard of the SEC, which is abbreviated for Securities Exchange Commission. Now these guys are the top dogs when it comes to regulation. These guys control everybody. They control the New York Stock Exchange, they control Wall Street, they control hedge funds, mutual funds, private funds, any kind of funds you want. You are most likely gonna have to be registered under them, and if you are not registered under SEC here in the US, you can get in some trouble. Some of the recommendations I can make when choosing Forex brokers here in the US are Oanda, Forex.com, and Interactive Brokers. These guys have very high reviews from their clientele. They have been around for a number of years, so they have a really good reputation in the Forex market. And of course, they are regulated by the SEC. So it can be said that if you are here in the US, it is safe to sign up under these brokers. However, you can also go do your own research. There is a few other brokers. There's not much brokers here in the US that offer Forex trading. However, these are the top 3 I have personally chosen after doing in-depth research. I want to make a little disclaimer. I am not affiliated with any of these brokers. My recommendation is personal. I'm not making any little commissions if you sign up. I don't have any link to throw at you, so don't worry about that. I'm only here for educating the new novice trader in making the correct steps in the early Forex journey. Now let's talk about offshore brokers. The majority of offshore brokers out there are not regulated by SEC. They could be residing here in the US, however, their business address could be somewhere in New Zealand, somewhere in Russia, just somewhere outside of the border of the US, because they know that some of the policies that SEC offers, their business model does not line up with SEC. Because SEC is strict with some of their policies, such as one thing we're going to talk about is leverage. I believe the maximum leverage here in the United States, if you are a Forex broker, is 100 to 1. However, majority of other brokers out there are the maximum leverage they offer is 50 to 1 or even less. So that's why you can find more offshore brokers than US regulated brokers. However, if you do your own research for offshore brokers, if you go on their website, you could contact them and they will tell you, they will state if they are regulated by any entity in the country that they are residing in. That's going to be all up to you. So if you will be choosing an offshore broker, it will be your job to do your due diligence and make sure that this offshore broker is regulated by some kind of entity. Now let's talk about the pros and cons when choosing a US regulated broker or an offshore broker. One of the pros of going with an offshore broker is they will offer higher leverage if compared with a US regulated broker. Now, majority of traders will probably end up choosing offshore brokers because they will get higher leverage. And with higher leverage, of course, you need a small amount of capital to open up bigger lots. With a US regulated broker with a leverage, maximum leverage of only 50 to 1 or 100 to 1, you're going to need, of course, more capital to execute at least one lot and start making that actual substantial money. With offshore brokers, I have seen leverages of 3,000 to 1 maximum. However, having bigger leverage also comes with a drawdown. Now having a higher leverage is like a double-edged sword, because majority of new traders come in, they're like, oh wow, huge leverage, I only need like a $200, $100 to open up one lot. They end up over leveraging their account to the maximum, get margined out, or completely blow away their account, because they're essentially at the end of the day gambling and they think they're gonna come in, make a quick profit and get out. However, if you are considering this as a full-time career, you're definitely going to have proper risk involved. And even if you have huge leverage, higher leverage, you're going to have to know how to essentially control it all and get that greediness away from you, because the 90% statistic is where 90% of traders come in and they end up blowing all their money away. The broker wins at the end of the day because statistics are always on their side, and they know that most likely you're going to blow away your account. If you have not blown it away, you're on your way of blowing it away. Some of the cons of having an offshore broker, on the other hand, is majority of them, or a lot of them, are regulated by almost no one. And so therefore they're kind of free to do whatever they want. They could manipulate the markets as they want. Something goes down, let's say war breaks out, they could take all your money and just go off, take their website off the domain and completely go off the grid with all your money. If war ever broke out in US, for example, and your broker is regulated by the SEC, all your money, all of the client's money is insured by someone. So that means that your money will be safe with the broker if anything ever breaks down. going with an offshore broker, it will be your job to do the research and make sure your broker at least has a good reputation. He's been around for a certain number of years. Always look up reviews, what other clients have to say, and some of the pros and cons, which is higher leverage for offshore brokers, no regulation for offshore brokers. So it's obviously better off to go with offshore brokers if you're new. However, if you want to be safe and regulated by someone, I recommend going with a US regulated broker and choosing one of these 3 brokers that I personally recommended, or doing your own research and going off with a broker, US regulated broker of your own choice. And some of the offshore brokers that I can personally recommend, that I have personally used, personally withdrawn money with, is FX Choice, Trader's Way, and LMFX. There's thousands more brokers out there, but these are my 3 personal brokers that I can recommend almost to any new trader out there because I have personally used them. And once again, I'm not affiliated with any of these brokers that I have recommended. I'm not gonna send you a link to make commissions. I personally make money full-time trading. I don't need any of that. This is my side giving back to the Forex community because I know it can be hard when starting off. I've personally started off, lost a ton of money, went with companies that offered me no education. I'm self-educated, and I know that it's a big struggle. It's a huge struggle, so that's why I'm here making these videos to help out as much as possible. So now we're going to wrap up the regulation section, and we're actually going to move on to how to acquire a Forex demo account. Now in this section, I'm going to do a full tutorial on how to acquire a demo account, how to acquire the MT4 trading platform, and begin practice trading. I'm also going to do a rough breakdown on some of the properties of the MT4 platform, some of the tools, some of the indicators that you can use on there. So let's head on over and break down on how to acquire this demo account. Hey everyone, in this section I'm going to go over how to acquire a Forex demo account for the purposes of practicing on your technical setups and actually just observing the markets, if you will, without risking any of your capital. Brokers offer you this little perk, I can say, which is beautiful. To practice. However, there is some things that do not apply on demo as you would see on live accounts. For example, slippage is probably one of the biggest things, and executions are almost instantaneous, and there's no slippage on demo accounts, so you can't really witness these things on a live account. So if you are ever executing a trade on some high volume news where there's going to be a lot of volatility, you might not get that slippage, and then when you go live you get this huge slippage and you're like, what happened in demo? I'm giving this little disclaimer to say that these kind of things happen on live accounts and not on demo accounts. So now let's take this time and actually go over how to find a Forex broker that could offer you a demo account. There is tons of Forex brokers that you could go through with and open up a demo account. However, I'm gonna go over the personal brokers that I have, which is FX Choice and Trader's Way. In this video, we're going to be going over FX Choice because you can acquire a platform for both a Windows and a Mac, which is beautiful, and you could just use this one platform and hook up any Forex broker you want. But the perk of FX Choice is that they offer the platform MT4 trading platform for Mac, which a lot of brokers don't. FX Choice is one that does. So now let's head on over and open up this demo account, and I'll be doing a full tutorial on how to acquire a demo account and begin your practice trading. So let's head on over to FX Choice right here. FX Choice, we're gonna go on their main website. So right here, you're on the home page of FX Choice, and right here on the right side, you could see Open Live Account or Open Demo Account. For the purpose of this video, I'm going to be opening up a demo account. So demo account, and there's a little notification that's saying you are opening a demo account. So I'm going to enter my email address real quick. Guys, please don't spam me. Next, full name, let's just put David. Country, USA. Where is USA? United States. Phone number, honestly, you don't have to put a real number. You can make up some number. I'm not going to put a real number. Just going to make a number up real quick. Account, we're going to go with MT4 Pro. Currency, US dollar. Or there's also Euro, Great British Pound, Aussie dollar, Canadian dollar, Bitcoin, and another, I think this is Australian dollar maybe. No, MAU, not sure what that is. The max leverage they offer is 1 to 200. So you're going to put that. And you're just going to put the initial deposit amount, which you are going to start off with. I recommend starting off with something realistic, that you're going to start with real money. If you're going to start with 1,000, put 1,000. Don't put 100,000 because that is something unrealistic. In this example, let's just go with 5,000 like it was. You know, but you really want to stay realistic and treat this demo account as you would treat a live account, because don't ever think that the bad habits that you acquire with demo account won't transition over to live account, because that's very untrue. Everything you do in demo, you'll most likely do in live, because demo, you're just pressing buttons. There's no emotions involved. Yeah, that said, let's head on over and finish this demo account. So we're gonna remove this I agree. I don't want to receive any promotional material from them. Then we're gonna press open demo account. This right here is my demo account, is open credentials. Login right here, password, you're gonna want to save this. Account type MT4 Pro, and we're gonna want to copy this somewhere into a safe place so we wouldn't lose it. Let me just paste it into here, into my Word real quick. So I got it right here. These are the credentials you're gonna be logging into your demo account once we acquire the platform. So you will also receive an email notification saying you that a demo account is open for you, and just in case you lose your account information, you could always refer back to your email that you received, and they will have the login and password right here for you. So now we're back on the home page of FX Choice, and now we're going to be acquiring the trading platform to which we're going to plug in the account information that we got, and then hopefully begin trading. So we're going to go under this tab right here, Trading Platforms. We're going to press on MetaTrader 4. So down here, MetaTrader 4 is presented, and it shows Windows, Android, Mac, and OS. These are all the options which you can download this platform under. You could acquire it for Windows, Android on your phone. It's available in both PC platform and Android, and right here, Mac, iOS. So if you have a Windows, you would pick one of these. Download MetaTrader Client Terminal. You're gonna choose the format you want it in, exe format or zip. In my example, I'm going to be acquiring it for Mac, so I would just press download MetaTrader 4. For OS, it should be a very simple and easy setup. All you have to do is just press on this download MetaTrader 4. You'll get a pop-up and it'll just start downloading. I already have the platform on my computer right here, so I won't be downloading it again, but it should, like I said, it should be a fairly easy setup to download. So after everything downloaded, you would launch the terminal. You would launch it, or it should launch by itself, and then we're gonna go back and this information that we got right here, the login and the password. Now we're gonna log into the MetaTrader 4 platform. So right here, this is what the platform right here looks like full screen. This is my live account right here, one of my live accounts that I use to trade with FX Choice. However, if you do acquire a new account, a live account or a demo, you're gonna have to log in to this terminal with it. So we're gonna go to right here, File, left tab, left upper corner. You're gonna put in Open an Account. Open an account, and it already presents me with some brokers: FX Choice Classic Demo, Traders Way Demo, Traders Way Live. So the credentials that we got is for FX Choice ECN Demo right here. So you would choose this option right here. You would press next, and then you would put an existing trade account. This server for FX Choice ECN Demo. So now we're gonna go back to our credentials right here. We're gonna copy and paste everything in. Copy, paste it right into there. Then we're gonna take the password too. Password, copy. And we're going to paste the password into here. You want to press save password or don't press save password, your choice. And now we're going to finish.
Incoming mail.
So now we are logged in. As you can see, the account number is up here. It's 79638 FX Choice Pro Demo. So once again, this is the home page right over here. This is what you will see once you log in. This is Bitcoin USD. As you can see, all these lines right here, don't be scared of them. All this is representing price movement. This little indicator right here is my own personal indicator. It tells me the current price of Bitcoin at, the high it formed for the day, the low it formed for the day, when the next candle is opening up in how much minutes, and it's just telling me the time frame I'm looking at. So to view your account balance, the $5,000 that we put in when we were opening up the account, you would press View Terminal, as you can see, balance is $5,000 USD, exactly that what you put in when you were creating this demo account. So next thing you want to look at is to pick a currency pair to look at. So you would press on this drop down menu right here, plus, and you can get this option of all of these currency pairs. As you know, we trade personally as Superior4X GBP USD, USD JPY, Euro USD, and gold. However, these are not all the currency pairs. To view everything, you would press View Market Watch, and then you get this pop-up, and it will show you all of the currency pairs to choose from. We don't really care about a majority of these. I personally focus on about 3 currency pairs and 1 commodity of gold. And to view one of these, all you have to do is, for example, one of my favorite pairs, you would press on USD JPY, and then you would just press chart window, and this chart right here opens up. You might not like this chart just because of all these grids right here. All the properties to fix all of this, to fix the colors of these candles, can be found under properties. All you have to do is right click on your mouse. You're going to go to properties, and for example, if you don't want this grid right here, just uncheck this grid box. You would press OK, and the grid is gone. And as you can see right here, the chart is kind of squeezed in right here. You don't have a lot of room right here. If you want to fix that, all you have to do is press on this little button right here, and it will shift your chart over to the left side so you have some more room. You could also toggle your chart if you press on so this right here is the price that you're currently looking at. You could navigate the chart views just pressing on the price section and kind of moving it around if you want to just get a better perspective. So we're currently looking at USD JPY in the 15-minute time frame. This right here is the price where USD JPY is trading at. the bottom section right here. So as you can probably know, this is the x-axis, this is the y-axis. If whoever took some math, if I could refer to as, on the x-axis, you will find the date. The date's July 3rd. This is everything for today. All this price movement is for today. The y-axis, you see the price that USD JPY is currently trading at. Right here in this section is where you pick the time frame where you want to be looking at. M1 is abbreviated for 1 minute time frame. M5 is for 5 minute time frame. M15 is for 15, and so on. And the maximum time frame you could be looking at is the monthly time frame. This is the bigger perspective of USD JPY. These buttons right here are obviously plus, minus. They are for zooming in and zooming out. If you want to see something in a more detailed, if you're looking at these candles, you could zoom in and kind of see what's going on there. These buttons right here will represent the chart type you're looking at. So if you press on the left chart, this is a bar chart. We do not ever look at this type of chart. We're just going to be sticking to candlestick charts. And also on the right, you get the line charts. This is good if you want to actually look where peaks were formed. It actually indicates very well on a line chart where highs and bottoms are formed. You know, it kind of removes all the noise and you can clearly see the highs and the lows. So this is a quick rundown of how to kind of get around the platform. And also you have a ton of other things you could be looking at. Once you start trading, you're gonna be obviously using all kinds of indicators. However, at Superior4X, we never use any kind of crazy indicators. We only use a few indicators to gain some extra confluence. But you would go to indicator section right here, and you have a ton of indicators. I mean, there's a ton out here. Majority of these we're not going to even look at. However, some of the most important things we look at is drawing horizontal lines to indicate support and resistance. So if you want to ever draw a horizontal line, you would press, you would go over to the left side right here, and you would press on this horizontal line, and you would just drag your line and place wherever you want. Right here, you could place. Right here, you could place. So this is what this is an indicator, or one of the tools I use to indicate my support and resistance levels. This trend line right here is obviously for trending environments, and you could indicate trend lines, or you could use these for whatever you want. If you see some highs and lows formed, you could utilize this tool to whatever you want. If you see a trend line forming, you could use this for trend lines. If you see some kind of channel environment, you could use it as a channel. You could use this for breakouts. So this is just a quick rundown of some of the bare basic indicators that I personally use. The only indicators I use is support, resistance, Fibonacci's, moving averages, trend lines, and I use all of these tools to gather the best confluence I can possibly get and get my precise trade entry. These charts right here that you're looking at, these up charts and down charts, you could change the colors of these candles, as we refer to them. In the properties section, go to properties, and right here you get this pop-up menu. If you want to change the background, you go right here and you choose whatever color you want. If you want to change anything, like I said, on this chart, that's the section you want to visit. So if you want to change anything on this graph, once again, you go to right click on your mouse, properties, and you could change all of the colors on this section right over here. Now you're probably thinking, I don't really care about all of this. How do I execute a trade? Well, to execute a trade, you would go to new order, and then you would press sell or buy. That's as simple as it is. But however, before you press sell or buy, you obviously have to know everything. In my previous section, I talked about some of the lot sizes to enter with, which will then generate for you X amount of dollars per pip movement. You could revisit section 1 and I describe it in more detail, but for the purpose of this video, I would just press one lot, volume under volume, and I would press buy or sell. So let's just execute a trade real quick. We're going to buy it. In this example, so we just bought USD JPY. You would go to view, terminal, and as you can see, the trade is running one lot. So with one lot, we're making $10 a pip once we go into profit. I don't have any stop loss set or take profit set, and as you can see, I am negative for this trade. The reason why I'm negative is because of something called spread. So if you press a new order, so if you can see the price difference between 298 and 305, there is a little difference, and this difference right here is called the spread. So if you were looking to take profits up somewhere higher, all you have to do is take this dotted line right here, as you can see where the trade is running, and all you have to do is move it up like this. And if you want to take profits at the price at 114, you would just drag it up. And if you were risking, say, $200 for this trade, you would bring down your stop loss right over here. So this is your stop loss, and this is your take profit. And if we go back to view terminal, you can see that the take profit is at 114.025 and the stop loss is right here. Of course, I'm not applying any proper risk management to this trade. I just executed this trade out of the blue with no technical analysis involved, because the purpose of this video is to break down how to acquire a trading platform and just begin observing the markets and everything that I indicate. For example, in my Telegram group, the levels, you could then mark up on your charts and begin studying the cycle of the market. Once again, the most important tools you're probably going to be using are these horizontal lines. And if you want to actually indicate a specific price where you want to plot this horizontal line at, all you have to do is double click on the line, right click, press to horizontal line properties, and under the parameters section, if for example, if you want to plot it at 110.500, all you have to do is insert your price and it will move down to that price. And same for the upside. If you want to indicate 114, for example, boom, right there, the price moves down there. And once again, this horizontal, this trend line tool right here that you can use to mark up trending environments, or like I said, you can mark up channels. You can mark up intermediate support and resistance levels. You could almost do anything you want. And if you are looking to use some other tools, for example, the Fibonacci tool is one of the most important tools I use. Here's the Fibonacci tool, and every other tool out there that you want can be found under the Insert Indicator section. You will find the remainder of the tools. Also, if you want to make notes on your chart, all you have to do is press on this little A right here, this text, and you would insert text like take profit zone. You press OK, and this is for someone who is really detailed about their chart work. There's a ton of other stuff like a thumbs up, thumbs down. We don't ever use any of this right here, but obviously you could use this arrow. For example, if you're like, okay, the market is trending up, you would use this arrow right here, and you could do whatever you want with it. So like I said, we don't use much. This is about how much we use. And if you really want to dig in a little deeper, you could mess around with all of this and find every indicator you want. You could change the colors of text. Like I said, there's a ton of things you could do. But for the purpose of this video, we are only going to be looking at how to open up a demo account and how to execute a trade and begin practice
trading. In the other sections, of course, they'll be more technical and actually explain how to get into trades, what to look out for. But this is just a rough breakdown of how to acquire MT4 trading platform and begin practice trading.
We have now successfully wrapped up part 2, Forex Brokers, of my Forex for Beginners series. I hope you enjoyed this video and the knowledge provided in this video helpful to you in your trading. If you have enjoyed this video, please subscribe, leave a thumbs up, drop a comment, and stay tuned for our next video. I'll see you all later. Bye.